Hello everyone, George DeSantis here with a look at the market for the week ending Friday, August 29th, 2019. As you know, I haven't done one of these in a couple of weeks. I've been traveling and then I took a nice fall on my driveway, which put me out of commission for a few days at least, or a week or two. And but back in shape again, little aches and pains here and there, but could have been much worse. In any case, before we start to look at some charts, I'll bring up a disclaimer as we usually do and urge that you read it, especially the last line here, which is that if you're looking for a licensed professional investment advisor for advice, you need to seek it out from someone who is so qualified. I'm a psychologist and I do this for my own purposes and share it as a video on YouTube, and anyone who cares to take a look can do so. But it's by no means intended to be professional investment advice. Now, as many of you know, I usually do a review of the general market using the S&P, sometimes the NASDAQ or the Dow, but usually the S&P 500. And I start with the weekly chart. Then we go to some of the charts that might give us some info concerning the nature of the market at this time. And then we will look at some individual stocks, especially on Shaken Analytics. So here's a weekly chart of the S&P 500. And as we can see here, the first thing I usually like to look at are these moving averages. The 4-week moving average would be this yellow line. The 9-week exponential moving average would be the red line. And the green line would be the 30-week front-weighted moving average. So these are clustering together here at the right side of the chart. In addition to that, we see that it appears that we found support, as I mentioned some weeks ago, the likelihood that we would find support here at that 61.8 Fibonacci retracement level, which turned out to be approximately 28.43 on the S&P. Well, that's just about what we did, with some piercing of that level here. Also, notice that the 50-week moving average was also acting as some support here. We seem to bounce off of it a number of times here and here and here again. So we're in this trading range. We have the parabolic, this white dot, just above the most recent bar, last week's bar. And it seems to be approaching the bar, so that if that parabolic goes below the next bar, which it looks like it wants to do, we would have now a signal to switch back to an uptrend. So let's bear that in mind. Again, this is a weekly chart, so we're looking at the longer term trend. Now, if we go down to the MACD histogram, we could see that MACD histogram turned bearish here 4 weeks ago, and it's remained bearish since then. However, last week the histogram ticked up a bit, shortened up a bit from below the zero line. So that's encouraging from a bullish standpoint. And also, of course, this bullish bar here seems to indicate that some of the pain is over. When we look at the daily chart, we'll get more information about that. However, now on the weekly chart, we also have the RSI 12. RSI 12 staying above that 40% line. And in fact, this 40% line here. And so that's very encouraging from a bullish standpoint as well. And if you look at Williams per centaur, it did remain throughout this pullback, did remain above that magenta line, that minus 50 line there. So the weekly chart is still within that range, this trading range here. However, it looks as though bulls are becoming stronger. MACD histograms shortened up a bit, and we have a nice bullish bar. So let's take a look now at the daily chart. So here's a daily chart of the S&P 500. Again, first thing I like to look at, moving averages, exponential moving average. The yellow line is the 4, the 9, the 30, yellow, red, green, right? They're clustered here again, but notice that the 4 has crossed above the 9, and 9 is looking to cross above the 30 here, it seems. Seems that way. So it looks as though we are looking to break out of this trading range. We do have the parabolic now below the two last bars, Thursday and Friday's bars. And so parabolic is saying on the daily chart, we switched to an uptrend. However, look at the overhead resistance. The resistance line remains here, as we saw on the weekly chart. And so we still have to overcome this resistance here. Looking at the MACD histogram, you can see that from the time we made this low here on the MACD histogram, bears have been losing strength almost continually here, and the bulls have become stronger and stronger here. So it looks as though this market is changing its character, personality, as the shaken people will say, and I'm looking to get back into it. If we break above this resistance level here, I'll be placing buy stop orders on certain stocks that I want to get back into. Although I did sell quite a few stocks, I'm holding a lot of cash. I'm looking to get back into the market, and I will do so if we break above this resistance level. Let's take a look at RSI 12. RSI 12 crossed above the 40% line here, and it's remained above the 40% line, that yellow line, and that's encouraging. Now, currently it's above 60% and appears to want to go even higher. Looking at Williams percentile, one of my favorite indicators, we just broke above the minus 50% line. We're at minus 49.32. So that's also very encouraging from a bullish standpoint. So in summary, from these two charts of TC2000, I would say we still have some work to do. The weekly chart is still within, both the weekly and the daily charts are still within that trading range, with resistance up here on the S&P at about 29.44, okay? But we did seem to find support at the 618 level, Fibonacci retracement level. So it looks as though bulls are taking over this market. And of course, when I say that, I'm not taking into account any of the geopolitical scenarios. Things can turn around in a nanosecond, as we all know. It could be a tweet, it could be something that the Chinese said or didn't say or thought about saying or dreamt about, or who knows what. But just purely on the basis of the technical analysis of the charts, it looks as though the market is intending to go higher. Let's take a look at some other charts. Now, we haven't done so in a while, but I thought I might look at the seasonal chart of the S&P using the SPDR ETF, SPY. And what I found is that there is a seasonal trade here from September 4th to September 19th, 85.71% of the time in the last 12 years or so, 10 or 12 years, the average profit in that move is about 2%. So that's a seasonal indication that at least for the next couple of weeks, we might see that move up, you know, insofar as seasonal chart is concerned. Here's another chart from Shaken Analytics on the SPY, and you can see that trading range here. If you drew two lines here, and you can see that is just below that approximately 200-day moving average. So we saw these sorts of this sort of structure before, that trading range, and perhaps we're going to break above it, etc. Now, if you go down here, you can see it's a little bit overbought, somewhat overbought, but it looks encouraging here again. Now here's a chart that I've been keeping an eye on, and it's something that Alex Elder taught me about, and it's a new high, new low index, and it's a 5-day average of the new high, new low index. So when we broke all the way down here in June, Alex sent me an email saying, George, watch out when it breaks back above that minus 400, this market is going higher. And of course, that's what happened. Now, again, we came all the way down to minus 1,000. And now we just broke above the minus 400 line. So put this together with what we've seen before on the TC2000 charts, and it looks as though we can see a higher move here. Here's a daily chart of the S&P 500, and you can see we have two green bars, Thursday and Friday, and that signifies that we should not go short here. If anything, we should hold what we have or go long, start looking to buy stocks. Here's a McClellan oscillator. You could see that it was trending down for quite a while. From June, it started trending down, and now it's broken that trend line. If you drew a line here, it broke the trend line, came back and found support there. So the McClellan oscillator is turning bullish here now. And here's that chart we've looked at many times before. It's a plot of the percentage of stocks of the S&P 100 above their 200-day moving average. And usually when it's between 55 and 65, or 50 and 65 really, you can actually be trading the market. Now it's sitting right at 65. And again, it looks as though we are sitting at that critical level where we might go higher. And here's one last shot on the general market, the SPY. And this is Dr. Ayler's StockSpotter.com website. This is a chart showing his cycle analysis. Typically, when these green bars occur, it means you have a bottom in the cycle bottom. And when the momentum is low and starts going up at the cycle bottom, that's when the market generally tends to move up. So that's another indication we might just break out of that trading range. And so here are some individual ETFs and stocks on Shaken Analytics. I'm interested in holding some of these ETFs for the near future anyway. So you can see XLU, the utility ETF, is one that is performing better. It's very bullish. That might change. XLC is the communication ETF. That's another one that's also bullish. XLK is based on technology, and that's bullish. And XLP is also bullish, and that's a consumer staples. You can slow the chart down and slow the video down and take a closer look. XLRE, the real estate one, is also looking bullish. So these are ETFs. And here's that list of stocks that I either own now or owned for some time or sold them recently. And so you can see Synopsys is still very bullish and is looking to move higher again, but it's overbought right now. So if you don't own it now, you might want to wait till it becomes oversold. Now, Accenture, I'm looking to buy that one again, but the fact is it's overbought. I'll wait till it becomes oversold in order to buy it back. iPay, I still own iPay. I like it very much. It's payment systems. I'm moving a little faster now because I'm running out of time on the 15-minute allocation here. Microsoft, I still own. You can see that that's also looking to find support at that 200-day moving average. XLK, I think I want to buy this one. It's looking very bullish again, and I might look to buy that one again. I still have some of the payment systems. You want to look at Visa. Visa still looks good. MasterCard still looks good. And I also own Zoom. Now I have a loser here. It's been losing money for me, but I'm holding it for now. Don't have a whole lot of it, but I'm holding it for now. That's all the time we have, folks. I'll try to do this again next week. Have a good weekend.